The fuel price and new vehicle sales, those are the topics that will be driving this Business is 7 show. Welcome and thank you for joining us. In tonight's show, we will be talking to experts on fuel price matters as well as new vehicle sales and how that reflects on the state of the Namibian economy. And new on the Business 7 menu from this week, we will bring you weekly updates on business highlights on the continent. Please stay tuned.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.
Consumers this week got a fuel price breather, and with the announcement, government said that they are now using a new formula to calculate the basic fuel price in Namibia. If government had tweaked the formula earlier this year, what would have been the impact on fuel prices? Theo Klein, economist at Simonis Storm, has this to say. And Theo, one of the significant changes in this week's fuel price announcement, was that the Minister of Mines and Energy, Tamal Vendu, said that they are now using a new formula to calculate the basic fuel price. Just quickly, in layman's terms, explain to us what that means.
So the change that they've done, Jomari, in the past, they've had two line items in their calculation. One was for shipping costs from South Africa, and the second one was shipping costs from overseas countries where we import our oil from. Now, in recent months, we have increased our imports of oil directly from overseas countries and less from South Africa, most likely also owing to the improvements made at Walvis Bay's port. So what they've decided to do is that because the imports of oil from South Africa has become insignificant or close to zero, they are going to take that line item out of their calculation or calculator that is used to determine local fuel prices. Because obviously the ministry would like to try and cover their importing or shipping costs of oil. So at the end of the day, consumers cover those shipping costs as well. The sad thing is that in the past months, we've had two line items for shipping costs, amongst other costs or determinants in the fuel price calculator. So if they decided to remove the South African shipping cost line out of the calculator a few months ago, it could be that we would not have seen as drastic or severe increases in our local fuel prices. However, in their defense, I guess, obviously, as time progresses and as monthly data comes in, you have to continuously monitor and see where is our oil coming from before you can make that decision. So be it as it may, I think going forward, at least, we will not have as severe increases in our local fuel prices based on the new calculator. However, I think what we should also be aware of, Germany, at the same time, they've increased the the price or the margin per liter for other cost line items in their calculator. So, for example, the fuel wholesaler margin has also increased by 20 cents, if I remember correctly. And then we must all remember that the road user charge, the MVA levy, the NAMCOR levy, all these levies that are part of our fuel prices, they have yet to be restored to their normal levels because the Ministry of Mines and Energy reduced them by about 50% in April. So, at some point we will need those levies to also be restored. And then last month, we also had the dealer margin increasing. So that was in response to local petrol stations saying that they're just not making profits or they're barely breaking even. So, they demanded a higher dealer margin. So, all that has also increased in the meantime. So that there have been these other changes in their calculator as well. So I think only time will tell whether removing South Africa's shipping cost is outweighed by the other movements that I've mentioned earlier.
While Namibia and its cities are seen as one of the cleanest countries in Africa, plastic pollution is a big problem. Therefore, it's up to each of us to do what we can to reduce the use of plastic, especially single-use plastic bags. At Liberty Life Namibia, we've taken the decision to turn all our old branding items into reusable shopping bags. It's a way in which we can drive sustainability and look after our most important stakeholder, our environment. If you also believe in sustainability and would like more information, please get in touch. Liberty Life Namibia. In it with you.
Why is the fuel price in Namibia so different from that in South Africa? Once again, Theo Klein, economist at Simonis Storm, has this to say.
Theo, it is always a bone of contention when there are fuel price decreases announced in Namibia and South Africa. And then the Namibians get extremely upset because why is the fuel price decrease in South Africa bigger than the one in Namibia? Why is that happening?
We must also remember, Jeremy, firstly, that our petrol prices and diesel prices are below that of South Africa's. So I think that in itself is a benefit for us. But so also, they have had larger increases than we had in the last couple of months as well. So with them being over 26 or around about 26 rand per liter and we only at 22, I think that in itself, is a positive for us as well. What I am aware of is that in South Africa, the reason why their fuel prices are higher than ours is because they have much higher levies and taxes than we do in Namibia per liter. That's the first thing. The second one is that they don't have a national energy fund that accumulates savings when they incur over recoveries. In other words, when they've sold fuel at too low a price than what they should have. When they've sold it at too high a price than what they should have, then they incur over recoveries. Those savings then get transferred to the National Energy Fund in Namibia. But South Africa doesn't have that mechanism. So whenever we have under recoveries, our National Energy Fund is able to withdraw some of their savings to finance the under recovery for us. So, I've done the calculation. If we did not have a National Energy Fund in Namibia, our petrol prices would have been over $25 per liter.
Wow.
At the moment. So I think, we must just be aware of that, that's the reason why our fuel prices differ. And it can also well be that due to different contracts that South Africa has, depending on the price that they bought from their suppliers, that's probably why they've had different levels of over recoveries, and therefore they could provide more relief to their consumers. But then the other thing is, if South Africa incurs an over recovery, that full over recovery is given to consumers, and then therefore prices will come down quite significantly. Whereas in Namibia, if we had an over recovery of $3, our Ministry of Mines and Energy might say, okay, consumers only get $1 of this over recovery. So that's why petrol prices only dropped by $1.20. But then the rest of the over recovery is savings that the government then puts toward into the National Energy Fund. And in that way, they build up their savings. So that's why our decrease was not as large as it was in South Africa. But I mean, that's a positive for us because the more savings the National Energy Fund accumulates, the more they are able to finance under recoveries. So that in South Africa, if they incur an under recovery, that full under recovery has to be passed on to the consumer. But if Namibia incurs an under recovery of, let's say, $2, then they can maybe withdraw from their savings so that consumers only have to get a 50 cents or an 80-cent increase in fuel prices instead of the full $2 increase. So that's sort of the mechanisms behind our fuel price differences.
Theo, a final question. What is Simonis Storm outlook for the global oil market at the moment?
Yeah. Germany, our outlook is fairly balanced, but I think it could potentially tilt to the downside for global oil prices towards the end of the year. On the what's causing oil prices to go down or to decrease going forward would be the increase in probability of economic recessions in advanced economies. So if there are recessions, obviously there's an expectation that demand for oil will decrease and therefore the price should come down. But then, and certainly forecasts are showing global oil prices of 95, 93, around about US dollar per barrel by December this year. Then on the other positive side is that the rand typically weakens in the second and the third quarter of each year, and it typically strengthens in the first and the fourth quarter of each year. So if that long run pattern plays out, then the rand is likely to weaken in the fourth quarter, also then benefiting us in reducing the Namibian dollar of our oil imports. So that's on the positive side. On the negative side, we do have that OPEC recently announced that they want to cut production to try and stimulate oil prices. Obviously, it's in their best interest to have higher oil prices because that benefits their economies and revenues for their governments. So they've announced that they want to cut production. But then also, as things stand at the moment, Germany, the global oil market can be characterized by demand exceeding supply. And that has been so for the last couple of years because we've seen less investment in refining and production capacity in oil producing and exporting countries. So, I mean, that's economics 101. If demand exceeds supply, the price should be rising or just remaining expensive. So that's why we sort of see global oil prices between 100 and 110 US dollar per barrel because of that situation. The other negative is that because of sanctions on Russia, we've seen oil reserves in other countries such as the US, the UK, and a few European countries going down. So as their reserves go down, obviously that means even less supply will be available in the future. So very short term, Germany, our view till the end of the year, we expect global oil prices to come in lower, and therefore we could probably still see more fuel price cuts in Namibia going forward. But medium to long term, the risks are to the upside for oil and for the global oil market.
You can have one or the other. It's not something that we at RMB like to say. So when faced with the conundrum of net profit or net zero, we say, why not both?
With the right people, it's possible. Commercial success or community success?
We like people who ask that question. Why not both?
Environment or investment? With our diverse talents, why not both?
In this changing business landscape, we find ourselves asking more and more how best to help our clients. Traditional values
or innovative ideas?
And the answer always is, why not both?
New vehicle sales are one of the most important indicators to give an indication of how healthy an economy is. Here to speak on the matter, particularly in Namibia, is Robert McGregor. He's an economist at Cirrus Capital.
Most important indicators of the state of an economy and consumers is new vehicle sales. In a nutshell, just summarize for us what has been happening on that scene the past few years.
Yes, so what we do see is that obviously new vehicle sales are a good indicator generally of household consumption or consumption in general. Obviously, there was a really strong buildup in vehicle sales up until about 2015-16, and since then, the annual vehicle sales figures have been declining. Obviously, a large hit in 2020 with the pandemic, and in fact, almost no vehicle sales. I think just 9 were sold at the start of the pandemic in that month in about April, May 2020. Since then, we have seen a bit of a recovery, but it's been a very slow and very, very constrained recovery. And it's very clear that we're seeing the consumption side is struggling. So households really aren't spending that easily on new vehicles. We don't have data for second-hand vehicle sales. So obviously, we suspect there's a lot of substitution towards second-hand vehicles, and anecdotal evidence suggests that that's actually been quite strong. And then also on the other side, what we saw up until about 2015 was a very strong government coming into to purchase vehicles, and that also boosted sales quite regularly. Since then, obviously, government has frozen a lot of their vehicle sales up until about last year. Some purchases here or there, but really not many, and that contributed to the large drop. But what we have seen is that government is budgeting to spend a bit more on vehicles going forward as well.
Robert, what are the main issues at the moment constraining vehicle sales, new vehicle sales?
Well, from the government perspective, obviously they've had massive budgetary constraints. We are seeing a slow return there, which I think for vehicle sales is positive, but it's really small compared to what we saw in the past. But also, from a taxpayer perspective, obviously that's more sustainable. For households and businesses, there's obviously been several large challenges. So there's obviously the supply side constraints. We've seen that since the start of the pandemic, the ability to get new vehicles, lockdowns affecting factories which are producing vehicles. The supply side constraints also affecting the parts. The semiconductor chips has been a big issue. And it's obviously slowed down the supply of new vehicles. In addition to that, that's also increased the cost. So the inputs have increased in price quite dramatically. But in addition to that, the shipping costs have increased quite dramatically. And so what we see is that there are regular price increases coming through. Sometimes as often as every month, we're seeing a 1 percentage point increase in price, which is quite dramatic. And so that's really limiting the ability for households and businesses to purchase new vehicles. On the other side, it's not just the input or the vehicle costs themselves, but also financing those vehicles. So obviously, since about 2015-16 and the deteriorating economy we've had since then, that's had an impact on household budgets and also on businesses, on their reserves and their revenues. And so what we've seen is that a lot of them have often required financing for that. The sharp rise in interest rates this year has meant that affordability has decreased quite dramatically. Over and above that, we've also had higher inflation, and that's really impacted real disposable income quite quickly. And so we've got these vehicles becoming more expensive and obviously more difficult to get hold of. Often people take what they can get. Dealerships are getting less vehicles than what they request, and often they're getting pretty standard models. On the one side, on the other side, the sharp rise in interest rates has really affected a lot, not just from the household perspective and on the affordability side, but also businesses. We hear of businesses who have budgeted a certain amount for their vehicle leases and similar. And with the rapid increase this year, they're well above budget on that perspective. And so that's definitely had a large impact.
Robert, a final question. When it comes to financing of new vehicles, how easy is it to get a loan from the bank, and what is influencing that at the moment?
So I think it's definitely become a lot more difficult over the past year or two, and we've heard that anecdotally as well. So previously with the low interest rate environment, yes, there was a lot of economic uncertainty still, but with very, very low interest rates and low inflation, banks were somewhat more willing to lend to finance new vehicles. obviously subject to their usual credit constraints or the usual appetite for risk there. What we've seen now is that we've heard of more loans being rejected quite more regularly, and that's down to the sharp rise in interest rates. Obviously, for every 25 basis or 50 basis points hike, or even 75 basis points hike, that obviously limits the affordability for a lot of people. We haven't seen such a strong rebound in the economy yet that incomes are really matching that. And so from what we hear, the banks are also a lot more cautious on the forward-looking side. So instead of looking at current interest rates in order to do those vehicle financing terms, they're looking at an additional, say, 100 or 150 basis points, given what we've seen the interest rate hikes coming through from South Africa and Namibia obviously following suit. And so we do hear that they have become a bit more stringent on that. We do hear of more loans being rejected now.
Every day, you make choices that make you legendary. Journey together with us on the path to securing your legacy as a member of the League of Legends. With the Select Platinum Bundle Fee Premium Bank offering, you will access tools that will enable you to thrive. If you earn 850,000 Namibian dollars per annum or more, you can apply for this offering today via bankvinted.com.na for only 447 Namibian dollars per month. Bank Vinted, a member of Capricorn Group.
As promised earlier in the program, from now on we will be bringing you weekly business highlights from Africa. This is courtesy of Reuters. We're going to play out with those highlights. And from me, thank you very much for watching the show. We'll see you next week.
Here are 5 business stories making headlines in sub-Saharan Africa this week. US retail giant Walmart has signed an agreement to begin buying the 47% stake in South Africa's Massmart that it does not already own, the company said on Thursday. Massmart, which has been posting losses and losing market share to bigger rivals, said Walmart had offered 6.4 billion rand, or $373 million, to buy the remaining shares and delist from the Johannesburg Stock Exchange. Zambia's debt restructuring will be a mixture of haircuts and maturity extensions, its finance minister has said. On Wednesday, the IMF approved a $1.3 billion program to rebuild the southern African country's economy, ravaged by mismanagement and the global health crisis. Finance Minister Sitembeko Musakotwane said some creditors would accept a haircut to get paid back faster, while others would opt for the debt to be paid over a longer period of time. Dubai's Emirates airline has said it will resume flights to Nigeria's megacity Lagos. That's after the central bank released a portion of funds the carrier had earned in the country, but not been able to repatriate. Also in Nigeria, the head of state oil company NNPC has said every section of society is complicit in the theft of millions of barrels of oil. Mele Kyari added that makeshift pipelines and stolen fuel had even been found in churches and mosques. Large-scale theft has throttled exports and hit the finances of Africa's biggest oil producer. And finally, Botswana has taken a step closer to its first utility-scale solar power plant. State-owned Botswana Power Corporation has awarded Norwegian company Scatec a contract to build the 50-megawatt plant. The southern African country is targeting at least 18% of national production generated from renewables by 2030.